Hi everyone, and welcome back to the channel. And if you are interested in understanding the financial markets and not through the price movements, but through the geopolitics, macro cycles, and structural capital flows, you are in the right place. And on this channel, I break global markets, the S&P 500, and the key investment themes through the lens of the policy decision, technological shifts, and long-term strategic trends in the same framework used by institutional investors. For deeper analysis, extended the research notes and the market structure insights, I invite you to visit my website, rolandpartners.com, where I publish the detailed materials and investment-oriented commentary. If you find this content valuable, make sure to subscribe to and follow along. We are just getting started. Now let's move on the SP 500 and the geopolitical forces shaping the market today. So when analyzing the SP 500 from the geopolitical and the macroeconomic prospects rather than purely through the price movements, we can clearly identify a sequence of the market regimes that have unfolded since 2020. So the year of the 2020, as you see in the chart, are basically classic exposed shock. It's the COVID pandemic and this disrupted global supply chains, halted cross-border mobility, and paralyzed the key sectors such as aviation, tourism, and international trade. The market forces and faced and with a level uncertainty it was not prepared for. And within the just 24 trading days, the SP 500 declined by nearly 34% and reflecting a panic-driven deleveraging cycle. And additional pressure came from the oil market, as remember or know, as following the breakdown of the OPEC agreement between the Saudi Arabia and Russia, which severely impacted the United States energy sector. And this period represents a textbook black swan event. And this black swan event just come through all this index and from all this cycle since 2020 till nowadays. And so from 2020 to 2021, the market entered the liquidity-driven recovery phase and aggressive monetary easing, near zero interest rates, and also unprecedented the fiscal stimulus allowed the risk assets to recover rapidly. And during the phase, the geopolitical risks temporarily faded into the background as liquidity became the dominant market driver. And since this period of time, and till to 2022, the regime shifted decisively. US inflation reached a 40-year high. It's crazy. And forcing the Federal Reserve into the most aggressive tightening cycle and indicates and simultaneously Russia's full-scale invasion of Ukraine that triggered of energy and the logistics shock, particularly for Europe. And the SP 500 entered the structural drawdown by repricing the capital and valuation comparison, and especially in the technological sector. The collapse, plus just we don't remember, we cannot remember that the FTX further depend on the risk of environment, and this was not a liquidity crisis; it's crisis of trust and accelerating the capital withdrawn from the speculative and the high beta assets. And during the 2023 is the market tensions into the adaptation and relocation phase. Yeah, I named this phase like the adaptation and relocation. Investors began pricing in the fragment global order, supply chain regionalization, and new geopolitical equilibrium. So in 2024, technological leadership, particularly in artificial intelligence, become the dominant growth driver. The United States company secures a strategic advantage. The AI ecosystem acted as a catalyst for renewed upside momentum in the SP 500. What's next? The Trump era in the 2025 market correction was fundamentally different from previous crises. Uh, we can see and understand it was driven not by the external shock, it's internal political factor and a change in the US administration and the launch of large scale tariff policies. This triggered the sharp but short lived policy shock. As trade rules become clearer and markets adopted, volatility subsided, and additional support came from easy money conditions. Which sectors and restores the relative attractive equities. But what we can to understand now, we look ahead in the 2026 and 2027. We absorb the information of the new geopolitical framework. The United States is consolidating its sphere of influence across the North America, Latin America, and the Middle East with a strategic focus of an energy security and the containment of China. This realignment reduces systematic risks for US corporations and enhances the structural resilience of the American equity markets. And so, in this environment, capital increasingly rotates toward the domestic US economy, supporting technology, energy, defense, and data security sectors. But at the same time, I see the potential drawdowns toward to the $5,000, $5,700, or 500 uh, 500 one second 500 $5,817, and it's can be the some scale of the range on the SP 500, but should be viewed not as the systematic risk events. I just foresee it's like the strategic accumulation zone for continuation the pumping and the SP and the stock market and the United States as a whole. And what we must understand, or just its markets have become more adaptive, and as geopolitical objectives become clearer and more structurized, their destabilization impact on the SP 500 diminishes, and the next cycle primary drivers are technology, basically the artificial intelligence, energy sector, and data infrastructure and defense innovation. Especially in the defense innovation, I would pay your main attention. And so, also, as you see in the chart, we have the interesting situation that there are the different phases on the markets, but there is the clear structure of the uptrend in the SP 500. But basically, it's started in my analysis since 2020, and there are some factors. And just let's to see on the time, on the period of the time, what the market really need to uh, pulling back, and it's takes place for 196 days in the first phase of the crisis, and then we see the clearly uptrend, and then also we have decline on the long period of time. It's 667 days, but the period of the uptrend, it's like really similar to this period of time. And it's some very interesting because, as you see, the charts looks really similar, and the current situation looks the same. And I just try to foresee the summer event and the political economy sphere. The summer crisis can be, of course, we don't know the future, but we try to predict some intentions in the some ways of the United States policy. And according to the policy, the United States want to return to the Doctrine Monroe, and this comes back. And according to that, the more intentions will be inside the United States economy. And the investors must understand that. And this statement from the US administration demonstrated. And I also anticipate there's some black swan effects to this line. And the basic idea is not crushing this line, because this line strength it looks like strength. And as we see, I just put the same events of the recovery of the SP 500 after the crash, the tariffs. And according to that period of time, we're pulling back so fast. It means that intentions of the new government and the new administrative policy understandable for investors and for most of the gamers of this big game in the big corporations. So I anticipate the current scenario, and the basic idea is if we see the black swan don't dump the price down the level of $5,640, or maybe can be a shorter deviation till to the level of $4,871. But I anticipate that the US economy must be grown, and the SP index must be the just strategic target, like the strategic target to the $10,000 per index. So if you like my comment and my vision, subscribe to my YouTube channel and also read the analytical articles on my website, coolonpartners.com. Thank you for the attention.